Good morning, good afternoon, good evening, traders from across the globe, and welcome to the 965th edition of Short-Term Trading Live with Oscar Carboni. Welcome, welcome, traders. 965 videos of this nature. This particular video is geared for short-term trading. It is for trading on Tuesday. That would be January 8th, 2013. So this video for Tuesday, January 8th, 2013. Traders, as we know, futures trading can be extremely risky and cause substantial financial loss. If you do not understand the risks behind trading, you should not be trading futures. Futures trading is not suitable for all trading accounts. But here we are for Tuesday, Jan 8th. Traders, I know the last video I left you out with, we had a longer-term view. That was not for day trading. And in that last video, the longer-term view was quite bullish. But this is for trading tomorrow on Tuesday. Traders, what you're looking at is the emini daily bar chart, the ESH13, so the emini S&P daily bar. What you are looking at up here is what I like to call an F flag, an F flag. That usually is a market or a formation that will work its way higher for days, if not weeks on end, before finally caving in. Sometimes it breaks out to the upside of an F flag, sometimes to the downside, but the point is an F flag is usually good for action like this, and it continues on sometimes for days, if not weeks on end. But this particular F flag, as of the close on Monday, looks like it's starting to break down lower, and it looks to me like we are going to go down here and try to fill this gap. Traders, here's the thing about gaps in the E-mini S&P. If you take a chart and look back for weeks and weeks, months on end, even if you go back on this chart, there are no real gaps in an S&P chart. Once this chart from March becomes most active, there are no gaps. So a gap is rare in the S&P. What's rarer, even more rare, would be an unfilled gap. So if you look back in this S&P chart, gaps do not exist, and if they are a gap, they get filled very quickly. So you'd have to think for now that maybe it'll try towards the downside. Now there are certain gaps that are called breakaway gaps or runaway gaps, and if that's the case, the market literally just continues and it takes off and never stops for weeks on end. But I don't know that this is an exhaustion gap. I don't know that it's a breakaway gap. I don't know that it's a runaway gap. I think it's your common gap. Very unrare, of course, for the S&P, common for technical analysis. But I think that this gap is likely, at least there should be an attempt to come down and fill this gap. So I'm worried about that. That's telling us to start the day off with a selling of the rallies posture and let the market tell us what comes next. So for short-term trading, i.e. Tuesday, this market will very likely try to fill the gap before returning back up. So we issued an OMNI to go short right after the close on Monday and around the reopening. We issued an OMNI recommendation to go short, and we do expect this market to move a little lower. So that's the S&P. Traders, let's go look now at the NASDAQ. Okay, traders, the NASDAQ daily bar chart with the 200 bar moving average overlaid right here. As you can see, another gap. Clearly, there's a gap right here in your NASDAQ chart. And the gap is, it's left and it's a wide open gap. Again, very rare occasion that you get a gap in an indice like the NASDAQ or the S&P. So I'm assuming that this, even though it looks like a really nice bull flag, this is a really nice looking bull flag if you ask me, right? You can put the flagpole right here, and then the flag itself is building right there. So there is a nice looking bull flag sitting right here, but the likelihood is that it will extend lower than that bull flag and try to fill this gap. We shall see. We'll take this one day at a time, 1 minute at a time. But when you look at a chart like this, you certainly would expect to fall out of that F flag just a little bit and possibly head towards that gap. So OMNI will start off the day trading Tuesday selling the rallies, expecting the market to come lower. If in fact anything changes about that opinion before the day is over, we would certainly let you know. But we are absolutely going to sell the rallies, expecting this market to start to head towards the gap. Traders, thank you so much for coming to tonight's video. I hope this helps to keep you in tune with where the markets may go on Tuesday. Remember to keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Thank you so much for watching our video 965. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.